Hi, my name is Ben. Today I'm going to be reviewing my Playbook trade, Midday VWAP Bounce. This is an outline of how the presentation will go. It's going to start with just defining what the strategy is. Then we're going to go into the specific trade, and then ending it off with a trade review and how to improve. So sometimes on certain days you see the VWAP just moving back and forth, price just shooting up, below, and just have no regard for VWAP at all. But on other days, you see VWAP just having one strong bounce and then being respected for the rest of the day. So, what differentiates those days? What days make VWAP very well respected, and what days are VWAP just completely ignored and disregarded? The most important prerequisite or characteristic of those days is a trending day. So, how do I determine what is a trending day? So, some characteristics they share is they have a trending ADD and a counter move. So, on just the ADD chart for that day, you see that there's an initial counter move at the open, and then it trends for the rest of the day. VOLD ratio usually, it doesn't have to be, but usually around or above 3, which indicates like just a strong ratio between increasing versus decreasing stocks in volume. And then you want to see a gap up. The important characteristics that I look for in the VWAP bounce is 11 a.m. midday consolidation. You want to see it consolidate above VWAP. See that there's clear separation, not like before where right here there's not a lot of separation between the VWAP and price, but here price is much more separated. And then you want to see the low ticks being bought up. So why are these three characteristics important to me? Well, because when I went back and I looked at all of the trending days for the past year, um, the most notable ones are that most training days have a midday consolidation. Most of them have separation from VWAP, and most of them, the ticks are getting bought up. So there are some nuances that you have to understand when you're using the VOLD ratio. Um, so here's the script. Usually, uh, it's just like up volume versus down volume as a ratio, and you would think that the more up volume there is, the better. But that's not always the case because a super high VOLD could just mean a low volume, like a low volume Monday or a low volume Friday, and that just skews the ratio. The reason why this is not optimal is because it just creates like a slow grind and subpar moves compared to actual trending moves. Like as you see here, the VOLD ratio got up to 20 or even 30, but the move is just pretty subpar. It's not what you would want. Um, the sweet spot, as I call it, is around 3 to 5, as you see here. And the reason is because you want it to be an active fight. Like you want to see sellers they're occasionally like they're landing like these jabs, but you want to see the buyers see the ones that are landing these strong right hooks and really controlling the market. Um, because sellers, when they get stopped out, they also add to the buying pressure. So that's what creates these strong and more impulsive moves is these stop lots being hit. Um, and that's why I like trading so much because you can't just rely on one ratio, one number to expect to be profitable or get alpha. Um, you need to understand the nuances in the context and be able to interpret what the number is trying to tell you. That's the script if you're interested in using it for yourself. And then there's also some nuances about the tick. So on gap up days, tick is usually above 0, as you can see here, and the low ticks are around 500-ish. Um, but whenever there's not a gap up, then you see it's like a much messier tick. But although it's much messier, the low ticks are still being bought up, as you see, if you compare to the chart. And the cumulative tick right here, it builds throughout the day. Um, this is important because if you see a like a tick chart and it's just very messy, that doesn't always mean that it won't work. Because if it's not gapping up, then it's normal for it to have a messier tick. Um, this is the script for the cumulative tick. It's pretty simple. The only thing you need to keep in mind is that you got to make sure the aggregation periods are the same for both the chart and the histogram. So in addition to all those characteristics, I also track the put call ratio because typically you want the put call ratio to be on your side when you're going for a big trending move that day. Um, I only use the put call ratio for equities because index options are usually dominated by institutional players using it as a hedge. So with so many institutional players using index options as a hedge, it doesn't really truly represent the directional sentiment of the market. Um, Equities, on the other hand, have a lot of retail traders playing large directional moves. So that really represents the sentiment and what people think as of that moment. I only look at the opening print, and in my experience, this has helped with the likelihood of an end of day move. So if you look here at all the put call ratios, it doesn't really have a strong correlation to whether the trading day would work or if there's a end of day move. But if you compare that ratio to the recent history, the recent average, then you can find a lot of information from that. So whenever the put call ratio is above the 5, 10, and 21 average at open, meaning that the put call ratio is higher than its recent average, that means it's bullish. And there's 80% chance of an end of day move when those conditions are met. Additionally, it can also help with um, identifying when an end of day move won't work. So if the current day and the previous day are both below the 5-day, 21-day, and 10-day, then there's a 75% chance that the end of day move won't work. So these are very helpful indicators. However, you have to keep in mind that it is not the biggest sample size, so the probabilities won't be exact or too accurate. There's four types of trading days, four setups at least that I use: pegged ADD, morning consolidation, stair-step, and recovery. So common characteristics for a pegged ADD is that obviously the ADD is very pegged. There's a high VOLD ratio. The VWAP retracement is fairly deep, sometimes breaking it. The consolidation is kind of irregular. Either it starts earlier or it lasts longer. It's pretty irregular compared to the usual 11 a.m. consolidation move. And there's an end of day move. Optimal entries would be at the lowest tick. So you see like the lowest ticks readings of the day right here are usually the low, and that's the best risk reward entry that you want to enter in for um, the trending move. And then exits would be just a new hive day or a 1 p.m. exit because sometimes when there's not enough strength in the market, 1 p.m. is usually like the apex of the move. However, if you do believe that there'll be continued strength on that day, then you can ride it out for just ride the 5 minute 21 SMA. So this is the blue line is the 21 SMA on the 5 minute chart, and you see on the days that it works, riding to the 5 minute 21 SMA will usually let you capture most or a majority of the move. Morning consolidation. So common characteristics is that it just has a morning consolidation, a morning range, and then the VOLD ratio is around 3-ish. Yeah, around 3-ish. It doesn't have to be, but it's around 3-ish. And then there's a sizable gap up. So in all these, you see a pretty strong gap up. And then the ADD has very good characteristics where it's a counter move and then trends, counter move, trends, etc. And there's consolidation after it breaks the morning range, and the lowest tick reading is in the morning. So you want to see that it tries to make a move lower and it puts in the lowest tick of the day, and then it breaks higher and consolidates. And that is usually your most optimal entry. And this 11 a.m. consolidation, and the exit would just be just riding the 5-minute 21 SMA as high as you can. Because in most of these, or in all of these instances actually, you see when it actually works, it respects the 5-minute 21 SMA for the rest of the day. Stair step. So stair steps is when it doesn't have a gap up. And when it doesn't have a gap up, the VOLD is pretty suboptimal. Like usually it's like at least positive, but not the best. It's not like above 3 or anything. Um, and because of that, a trending ADD is very important. You want to see very strong ADD migration, um, and you want the setup to look like a stair step throughout the day. See how it's like stair stepping, prices going upwards and upwards. Um, the best entry would be this 11 a.m. consolidation, and if you can identify a low tick reading, that's just an added plus, and you can get a pretty good risk reward. However, it's not necessary because sometimes these setups they like to consolidate in an ascending pattern, so you won't always get that low tick, but that's also fine. And then your exit would just be the 21 SMA break. Um, in most of these instances, you see it respects it very well throughout the end of the day. So the last one is recovery. Common characteristics is that it has a pretty big gap up, and it tries to close the gap. Right here, it tries to close the gap, but then it reverses, consolidates, and then trends. The VOLD is usually around the sweet spot. It doesn't have to be, right, but it's usually around the sweet spot of 3 to 5, and there's a strong ADD recovery. So pops down and then pops back up, down, up, down, up, down, up. What I've noticed is that these consolidations tend to last longer on these recovery setups. So your best entry would probably be around like 11:15 to 12. And if you can identify a low tick reading, as always, it's an added. But if you can't, that's fine as well. Just around this consolidation is where you would want to enter. And then exit would just be 21 SMA break. So it usually respects it throughout the day. And then when it breaks, that's just your best exit. These setups, however, they tend to end earlier. Um, like I noticed it ends around like 1:30 or 2 p.m. rather than giving you the full end of day move. So expected value calculations. Um, I took the minimum risk reward. Obviously, it's very possible for you to squeeze much more than a 1-2 or a 1-1 from these setups, but I took the minimum, and the win rate is based off of just like not the biggest sample size. Um, but as you can see, the expected value for these are very, very good. So, like, even the perfect setup or it like any setup can fail, right? As you can see here on September 2nd, um, I keep score of how good the setup is based on how many criterias that it has met, and the score goes from 0 to 6, 6 being the perfect score. So on this day, it had the perfect score, very good ADD movement, high VOLD, consolidation, separation from VWAP, the low ticks are being bought, but it still failed. Um, and what I can attribute that to is the market news and the bigger picture fundamentals, the bigger picture technicals. So on that day, it was a job report Friday, and following that would be like a Labor Day weekend. So there'd be no trading on the Monday, and the technicals with that is a longer term downtrend continuation. Similarly, on January 9th, it was also the same thing, same score, 6, perfect score, but there was Fed rate fears in the middle of the day, and there was a longer term downtrend continuation, so it just didn't work out. Um, and it makes you realize that there's many factors that are in play in the market, such as the market news or just like a big resistance level on a bigger picture time frame. So you have to always keep that in mind when you're taking these setups. So I wanted to understand what are the best market conditions that will increase the probability and decrease the probability of the setups actually failing whenever it's a perfect trade or perfect setup. So I went ahead and I identified all of the market conditions and market news. And what I found to be the best was you want it to be an in-play catalyst, and typically you want to have good news or just a good reaction to the news um, with the in-play catalyst. If not, then you just want there to be no upcoming events. Like, for example, if there was a Fed day the next day where they announce interest rates, you wouldn't really expect a big trending move to happen the previous day, right? Like, to most of the time, like these big economic news events, they would probably like have a lot of, it would stifle a lot of big directional moves prior to it. And then for a bigger picture, what I found was uptrend continuation is the best. Um, but also, whenever it's a extended downtrend where price is near the bottom of the Bollinger Band, these setups also work. But ideally, you'd want to have an uptrend continuation. So on the specific day, the bigger picture was that it's on a daily uptrend. Um, and there was a strong job report reaction. Um, there was a recent rejection from the 4,200 as regional banks were selling off, and there was high put call ratio coming into a job report Friday. So everyone was bullish. There was a recent rejection, failed breakout, and people were just really playing the short side. The prior day, it gapped below, and it stayed below. So on this day where it gapped up completely out of range, I knew that there was many shorts completely out of position. So I was looking for a short squeeze because it was good news and good technicals. So it's the ideal day to play this setup. Intraday fundamentals, there was a very strong VOLD around 6 or 7. ADD was pegged around 2000. Low ticks were being bought. Tick was above 0. Put call ratio 6.8684, um, giving it a score of 5 out of 6. So the setup that I was looking for was a pegged ADD VWAP bounce. So stock selection, on that day, the most outperforming sector besides ARC was the semiconductors, and NVIDIA had clear strength from the open relative to SPY, with it having 3.3% up compared to 1.52, almost, well, more than double. Um, and on the daily time frame, it was on a strong uptrend near the 52-week highs, and there was lots of space upwards for it to move. And just look at that. Just look at that nice consolidation on NVIDIA. So the trade video was too big, so I just have it here. So started off, um, what I saw here was these low ticks are being um, bought, right? And ticks are just remaining above 0, pegged ADD, and a strong VOLD um, throughout the day. And then I had my alert set at the flush because the setup for ADD, pegged ADD, is that um, a flush in the lowest tick reading of the day is usually the most optimal entry. Um, So here you see me getting in because it just made a new flush, and at this point, it's a pretty good risk reward. Um, I knew that uh, typically on these pegged ADD setups, when it breaks below VWAP, it's the best entry, and it hasn't broken below it yet. However, sometimes it doesn't break below, and at this point, it's a good risk reward. So I just added a starter position because if it went on without me, I want to capture it. And I realized that at this point, there is EV to be captured. Um, so I added a momentum add here, or it's a buy stop. So if it flushed through this area, then my thought process was that if it breaks above the recent swing high, then I don't see any reason for it to not just go and start trending. Um, and it happened to fill me right there. And then here you see I'm getting into more SPY calls as well. There I'm getting into more NVIDIA calls. And then so when it finally made this flush, I added more SPY calls. Um, this was a flush that is a common characteristic of the of the pegged ADD, um, and it just makes sense for me to add there. One thing that I do need to fix is my ads because I wanted to add a lot more on this, but since I was in drawdown from the momentum ad, it really hindered me and didn't really allow me to add the size that I want at the location that I want. And then just fast forward, I'm setting my sell stops, and then when it hits high of day, that's when I sell. And if you can see here, I'm about to get filled on my last NVIDIA call. Yeah, and that's when I'm just all out. So, oh, yeah, yeah. So there was a lot of things that I could have improved on this trade. Um, my entry was pretty decent. Um, just a textbook 11 a.m. entry. It's nothing too bad. However, my ads was where I felt like I messed up the most. Um, I need to focus on having a better trade location for my ads rather than just adding momentum because I realize that there's still a spike lower that is possible. So why would I try to put on position where it would make me feel very uncomfortable? Um, my exit was that new Hive day. It's not a great exit because my setup says a 1 p.m. exit, and I didn't leave any trailers to capitalize on the 21 SMA ride. Um, this is not optimal because since I was already experiencing drawdown from the momentum ads, I just wanted to push for just like taking my profits as soon as possible instead of trying to maximize my trade on the day that I should, because this is a very good day that I should be pushing my trades and pushing how much I try to capture. So how do I improve this? Um, I track this setup very often. I'm very familiar with the nuances. So when I see it happening, I need to swing reasonably, swing well. Um, However, these bad ads just really stopped me from putting on the sides that I wanted to because it put me in a position where I was uncomfortable with the drawdown that I was in. So it just it wasn't well. And additionally to that, because of the bad ads, um, instead of making me want to push for the best target, I actually started playing defensively and trying to just capture the minimum target and capture just the new high of day rather than waiting for that end of day move and my actual setup target. This is important because in the long run, I need to be doing these things in order to maximize how much EV I capture. Um, yeah, that's the end for my playbook trade review. Thank you for watching, and I hope you have a good day.